If Williams is right and inflation starts to abate faster than Wall Street expects, then stocks should get a major boost because the Fed won't need to be as ruthless with the economy or with your portfolio. That's not the only reason Williams is bullish on stocks in 2022. He's always searching for patterns. One of his favorite is the decennial pattern, decennial, which can seem a little silly, but it's surprisingly useful. Now, I know this one's going to knock your socks off, but listen, reason with me. Go with me. Check out this chart, which shows the action over the past year, coupled with forecasts for years ending in the number 1 in red. Number 1. The red line is only showing you points where the market is likely to change course. You have to ignore the magnitude and just look at the direction of the moves. And by that standard, it was a pretty helpful guide in 2021. I know it's ridiculous, right? I mean, it's ridiculous. This method works. I mean, who the heck cares about the years ending in 1 or 2 or 3 for that matter? But the truth is, some of the strongest patterns in the market are also very dumb. Sometimes you want to try to make money, you need to embrace the market's seemingly irrational behavior or atypical patterns, whatever you want to call it. Now, what does that mean for 2022, a year that ends with a 2? Well, the forecast for years ending in 2 is pretty choppy, with a substantial low expected in June or July. Then you tend to get another terrific buying opportunity around September, with the market tending to take off in the fourth quarter. I mean, it's pretty bullish. Williams also points out that historically, in years ending in the number 2, you want to buy into any major sell-off. Hey, maybe that's what we're having right now, because usually you end up being very good at, well, it's a very good year for the market, so you're going to be very good for your portfolio. Finally, how about Larry's cycle forecast for the S&P 500 itself? On an immediate basis, he thinks the market's recent rally will hold up, though through the middle of this month. Then the S&P will get hit with its first real correction, which is going to be brutal, okay? And that correction could take you a while to play out. But Larry's cycle forecast suggests that you're going to get a wonderful buying opportunity by late February. Now, if you want more detail on this or any of the stuff I just went over, you got to go to his website, which is ireallytrade.com, kind of like I Really Trade, ireallytrade.com. Here's the bottom line. The charts, as interpreted by the legendary Larry Williams, suggest that inflation might cool down faster than most money managers anticipate, which would mean that 2022, which ends in the number 2, could be a much better year for the market than we're expecting.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.